Have you ever looked at a market chart and just felt like something big was about to happen? Well, right now, we're seeing some really fascinating signals that suggest Bitcoin might be quietly getting ready for a massive move. The real question is, does the data actually back it up?
Okay, let's just get right to it. The big question on everyone's mind. After 2 straight months of a downtrend, could Bitcoin really be gearing up for a run to $120,000? The on-chain data we're about to unpack is telling a pretty compelling story. And this whole idea, this whole theory, it really hinges on one single powerful concept: seller exhaustion. It's a term you might hear thrown around, but what does it actually mean? And more importantly, why does it matter so much right now?
To put it simply, it's that point where pretty much everyone who wanted to sell, well, they've already sold. The downward pressure just runs out of steam. And this creates a kind of vacuum, which makes it way easier for buyers to step in, take control, and, you guessed it, push prices higher. Here's a great way to think about it. Picture a classic game of tug of war. For the last couple of months, the sellers have been pulling with everything they've got. But now, their team is getting tired. Some are dropping the rope, the intense pressure is fading. And that gives the buyers a real chance to finally start pulling things their way. That's seller exhaustion in a nutshell. So look, this isn't just a hunch or some kind of guess. There's actual data we can look at. So let's dive into the on-chain signals. We're talking about the real evidence straight from the blockchain that suggests this seller exhaustion is actually happening as we speak. We're going to focus on two really important indicators. First up is the short-term holder RVT ratio. All you need to know is that this measures the speculative heat in the market. And right now, it's super low. The second one is the realized profit/loss ratio. This compares profit taking to loss taking, and it is dropped to a perfect balance of 1.0. Let's break down what each of those really means. Okay, first, that low STH-RVT ratio. When this number drops, it's like the market is going through a much-needed detox. The speculative frenzy, all that hype, is being washed out. Things are calming down. And if you look back, historically, these quiet periods are the exact launch pads for healthier, more sustainable rallies. And then there's that profit/loss ratio hitting 1.0. Now, this is a big deal. It means for every dollar of profit being taken, there's a dollar of loss being taken right alongside it. The scales are perfectly balanced. Aggressive profit taking has disappeared, sellers are losing their momentum, and the market is shifting into neutral. That's often the final pause before things really start to accelerate. So, with the sellers looking tired and the data showing a big shift, Bitcoin now finds itself at a huge fork in the road. The next move from here could really define the trend for the next few weeks. Let's look at the two very clear paths that are laid out in front of it. And right now, everything, I mean everything, hinges on one number: $115,000. Think of this as the line in the sand. It's the key support level, and honestly, holding it is absolutely essential to keep this bullish scenario in play. Okay, so here's where the rubber meets the road. The bullish path is pretty straightforward. Hold that support and punch through the resistance at $117,261. If that happens, the door to $120,000 swings wide open. But on the flip side, if it can't hold $115,000, the bears take back control, and we could easily see a slide down towards $112,500 or maybe even lower. So we've looked at the theory, we've gone through the data, and we've laid out the two potential paths. What's the big picture here? Let's put all these pieces together one last time. So here's the bottom line. Bitcoin is at a critical make or break point. We have powerful on-chain data suggesting that the intense selling pressure from the last 2 months is finally fading away. We've got two clear scenarios with very specific price levels to watch. That $11,500 support level is everything. If the bulls can hold that line, all the ingredients are there for a really significant recovery.
And that leaves us with the ultimate question, doesn't it? The signals are strong, they suggest a big change is coming, but in this final tug of war between the exhausted bears and the hopeful bulls, which side is going to find that last bit of strength to win?